let's say you are trading with the trend. We will take this example of chart, Australian dollar, US dollar, this time frame, because this is what it's the first pair we have on in our list. Starts with A. Now, the first one is the stop loss. We have a downtrend. Obviously, we should probably think about selling. Where would we sell? Let's say we might have opened a sell here and gained this trade. The next one will be somewhere here maybe. So as soon as the price moves high a little, forms a swing high, you will consider opening a sell here. Place your stop loss as your chosen distance. What happens next? The price doesn't drop so much. Instead, it rises. It will hit your stop loss. Maybe you think the price will drop again since it forms this other sell here. Well, you will open another sell here. The price starts to drop, but again the price rises again, and your other stop loss will be, well, who knows, somewhere here maybe. And so when the price will reach that level, you will lose again this stop loss distance. And that's the stop loss and why so many traders in Forex fail. Now, another one is the martingale on the same chart. The martingale trader will bet on the same side of the coin by doubling the bet usually and hoping that the luck will change for them. What does that mean? By using the same strategy, trading with the trend, this trend in particular, the martingale trader would open a trade here, for example, of, let's say, lot size $1. Well, the price goes up eventually, then the martingale trader will open another trade here, let's say $2 size, and the price goes up again. The martingale trader again considers this as a move to the price will drop down eventually, as he hopes, and opens another sale, maybe higher lot size again. But since we don't know what happened, the price might just as well rise up and empty his account in a few hours or even minutes if something happens on the financial market. And that's the martingale, is hoping and doubling the bet, betting on the same side of the coin. Now, hedging on the other side. Hedging is pure mathematics, arithmetic actually, grade 2 probably. Well, what does it mean? It means that same chart, same strategy, trading with the trend. We open the sell here. Instead of placing somewhere here, instead of placing a stop loss for the previous swing high or lower high or however it's been taught to, just place an opposite trade at that distance. An opposite trade would be a pending order, a buy pending order. And the buy pending order should be higher the size of the sell that is already open. So if this will be the sell of $1, for example, it doesn't have to be double. It needs to be calculated. You need to be, it needs to relate to your chart. Then you will place a pending buy. But in this example, let's say it's double of $2. What happens next? Let's say the price doesn't go down enough to close this trade in profit, to trigger some break even or reach the take profit level if you have one. Instead, it rises. It will hit this pending buy order placed, let's say, above the previous high that you have here. It will hit the pending buy order and open this pending buy, and then the price will continue to rise, and it will rise enough. Well, eventually, it will. If it didn't here, eventually it will rise enough until this buy, which will be now an open buy order. The profit from this buy, double the size, will cover the loss from this sell. And once you will be at break even, you have two choices. Well, at some point, let's say somewhere here, at some point here we will reach the break even, and the buy plus sell will be equal to $0. This will be your break-even level. That's because the buy is bigger than the sell again. Well, at this point you can close both of them and you lost nothing. Or what you gain here, you lost here in the same thing. You lost nothing for this basket. Or if you are sure of a trend, if you think the trend will continue to rise, again, it's also about trading. This is not magic. If you think that the trend will continue to rise, then why not? You can leave it, make it, leave it, let it run in profit. Well, my personal thing is I used to close them at break even. For me, if I have a basket of opposite trades are open, I already considered a loss. Well, because I didn't get lucky with the first one. I've lost the first trade, and for me it's a losing trade. And my personal purpose is to close all the trades at break even. But I don't know, for better traders, maybe you are sure of the trend, you know what's happening, and maybe you want to leave it to go in your favor and actually make money from a losing trade by hedging. And basically this is what the more experienced traders say, this is what they refer to when they say that to be a good trader you must make a losing trade into a winning one. There is no other way. Well, it could be martingale, but this is too risky. So sometimes martingale works, but the hedging works almost all the time because the price sooner or later will go in either direction, either up or down, and either this opposite trades will cover the losses from the other one or the other ones. Now, about this expert advisor. Finally, the RobotFX Expert Advisor. It has, what did I do? Let's start with the settings first. It has the recovery zone setting. That's the 50 pips. Everything is in pips, should be. And the recovery zone is the distance between the first trade that you open or first pending trade that once activated, it will become a real trade, an open trade. And it's the distance where the expert advisor will place the pending order. So for the default settings, it's 50 because I like to trade on H1. And well, these are my settings for H1, 50, 75, and so on. You choose your own settings for your own time frame. Mind the hedging, though, it's not so successful on the lower time frames. Because on the lower time frames, and depends on your recovery zone distance. If this is very small, then the price will move up, down, and hit those opposite orders, and it will open too many, and this could lead to a disaster. So it's not for scalping. But again, if you can do it, test it in a strategy tester, test it on the demo account. If you can do it, it's up to you how you use this. Hedging method or how to use this hedging tool if you decide to acquire it. Now, again, the recovery zone is the distance between the first open trade and the next pending order that the expert advisor will open for you. And once this pending order will be hit, if the price will go up, further up, it doesn't matter. Once this order will be hit, the expert advisor will place another pending order, which will be a sell, of course, now at the same distance, recovery zone distance, from the last open pending order, which used to be this pending buy. So in the case the price drops, will be covered again because the profits from the first sell and the second sell will be higher than this buy, which will become a losing trade, right? This is how it works. Take profit zone. This will appear also on the chart as a line, as a horizontal line. It's the distance from the higher or the lower. Let's say this is the recovery zone area. This will open the sell. Here will open the buy. So maybe even better draw a rectangle. Describe it better. Move this away. This is the recovery zone area. The take profit level is the distance from the higher, the buys, or the lower, the sells, where the expert advisor calculates that it will it will be a break even for this basket of trades, or for one trade, for even for the single, only the first trade. You have only one trade on the chart. And what next? The break even. Well, the break even, it's obvious. If you have a losing or winning trade, and the price goes you at a distance higher than the break even with the spread, break even plus spread, then the expert advisor will trigger a stop loss for that trade. And this is useful because sometimes, as you can see, the price can go up. In this case, it will trigger the break even and then decide to go down again. It's a good thing. Well, it's a good thing we have the break even and stop loss place now. So it will close this trade, and if it will go down under the buy, under the level, the recovery zone level, then it will place another pending buy. So in this case, we could have a pending buy, only the sales open, and if the price will drop, then it will be only profit. Now open buys open. Now the maximum orders is the maximum numbers of trades that you allow the expert advisor to have on one chart. Basically, if the maximum number of orders is reached, the expert advisor will not place any other pending orders, and you can also have the option to force to close all these baskets, all these trades, all the trades on one chart if the maximum orders is reached. So once it will reach, in this example, 16 trades, if you set this to true, the expert advisor will close them all regardless of the profit, and carefully, it will be a negative profit. Because as soon as it will open another, the last order, it will close them all. Okay, what's next? The minimum profit. Magic number. You can use the magic number if you want the expert advisor to hedge trades opened by another expert advisor, and make sure this magic number, our magic number, will match the other expert advisor's magic number for this. So basically you will have two charts, one with this EA and the other with your expert advisor that opens a trade. And also make sure that the one that opens trades is not allowed to manage them, otherwise they will you will make a mess there. They will both try to manage a trade or basket. The trade command, it's advisable not to change it, and you shouldn't change it. Well, you can change it at the beginning, whatever you want. Don't change it after the expert advisor will start trading, because it's related to the pending order that if you like to trade by placing pending orders, you can. However, place only one, don't place 1,000 of them, because it will confuse the EA. So place the pending order, and then once the price will reach it, the expert advisor will take care of to hedge it, and will manage it by hedging it. The minimum profit is basically the sum of the buys and the sells on the chart. The sum of all those trades that you are happy to that once that sum will reach this minimum profit, you are happy to close that basket of trades, and the expert advisor is allowed to close these trades. So technically, if you set this close trades at minimum profit, and the minimum profit is in this case almost 0.01. I never set it to 0 for some reason. I guess I'm just greedy. I want to gain something instead of nothing. So 1 cent is better than 0. Once the profit of this buy, sell, will be 0.01, and this will happen on approximately around this take profit levels for the buys and the sells. Once the real profit will reach this minimum profit, the expert advisor will start closing the trade, will start closing the basket. And that doesn't mean that it will close all of them, and after it will close all of them, you will have 0.01 profit there in the history trades. It means that it will start to close them. So between those few seconds, 2, 3, 1, I don't know, depends on your broker servers and the internet connection, many other things. the price could move a little more in your favor, or not in your favor, and you will have minus $1 to $3 or plus $1 to $3. Depends on your lot size now. But you can also set this to false if you don't want to close the basket at minimum profit, and follow this scenario where the price will move in your direction, either direction, and you think it will keep moving. Then don't close them. Let them run if you want to. Now, close trades that take profit. If you set this to true, the expert advisor will again close one trade, the first trade, or a basket of trades once the take profit is reached, the distance 75 pips by default. Change it by your depending on your chart, your time frame, and so on. And again, if the minimum profit is reached. If the minimum profit is not reached, it will not close trades at take profit. But this happens because they are related, and well, around the take profit level, the minimum profit should be reached. Now it depends a little about the spread too. So it should close anyway at break even, around break even. Show comments. Whether or not to show comments on the chart. Well, it's Saturday now and nothing works, so the expert advisor will do nothing if I attach it. You have some comments on the chart here on the left telling you about the break even, take profit, and take profit levels, and so on. The slippage, what else? The slippage is the distance that the price can move from a trading command until the execution, till the broker server will run it or not. If the price moves more than the slippage distance, since you gave the command and until the broker server tries to execute it, then the server shouldn't execute it anymore. This is it about the settings. Now, let's see a strategy tester very fast. We have the recovery zone to 50 pips, take profit 75, break even set to 35, maximum order huge number of 15, smaller, or leave it 15. And what else? We don't want to close the trades once the maximum order is reached. Minimum profit set to break even. We want to close the trades that pay a minimum profit. So we'll close the basket of trades and start a new one. We want to close the trades at take profit level, 75 pips, and we want to see the comments. Let's see what happens. Slow the simple chart, which basically shows nothing. And by the way, the expert advisor in the strategy tester, which I'm using now, test it. In the strategy tester, the expert advisor opens random trades. It doesn't follow any trend. It says no trading strategy. Just opens random trades. So you can see how it works, and only that. Don't think this is a winning or losing because it does absolutely nothing. I should have chosen a higher time frame. Anyway, so let's say you open this trade, a sell. The expert advisor immediately placed a pending buy above. And one thing I probably forgot to mention is that the size of the pending buy in this scenario, the sell is 0.1, the buy is 0.17. The size of the opposite trade, it's given by the ratio between the recovery zone, this distance, 50 pips in this case, and the take profit distance, which I told you they appear as lines on the chart. So if the price goes up, here's the take profit, and also the break even should be somewhere here if it's set to 0, the minimum profit set to 0. Also for the sells. And if you want the opposite trade to be double the size, if for example this buy stop to be 0.2, double than 0.1 of course, Then you have to have the recovery zone, the ratio between the recovery zone and the take profit. The ratio must be 1-on-1. So they should be equal basically. Recovery zone 50 pips, take profit 50 pips. Now it's 75. Anyway, let's see what happens next. We triggered the break even. The stop loss has been placed at break even. We can no longer lose on this trade, right? So the expert advisor closed it at take profit 11 as instructed. Now let's say you open a buy here. Immediately after you open a buy, the expert advisor places the stop loss at the recovery zone distance. We have the recovery lines on the chart just for your information. And this is what I wanted to see. The price hits the stop loss, the price hits the pending sell, the opposite pending sell. As soon as the pending sell becomes a real order, an open order, the expert advisor places another pending buy at the same distance, of course, 50 pips away, the same level as the first one, which is a buy stop of 0.19. Also calculated so if the price will now move up, well, if it will move down, this sell will cover the loss from the first trade, the buy. If it will move up, then it will trigger the next pending order, this buy 0.19. And again, if it will go up, it will be running in profit, covering the loss from this sell. And this is how it works. This is what hedging means. And it does go up. And the same thing happens as soon as it triggers the buy, the pending buy, it will place a sell stop. And again, buy stop. Eventually the price dropped enough to trigger the break even and to place the break even for the stop loss for all the sell trades. Remember, break even was at 35, I think. Oh yes, it is on the chart already. By the way, these are the comments, whether to show them or not. And yes, the price eventually dropped. And that was a hard basket that way. We had 1, 2, 3, 4 open trades. Usually there are only 2 or 3 trades. That's why I said a maximum order set to 15. This is huge number. You should never reach that number. And again, same thing happens. Let's say we open a buy here. The expert advisor placed a sell stop at the recovery zone distance. We are unlucky. Price drops, triggers the sell, places the break even, which is a good thing. Closes that sell, break even, and opens it again because the price continues to drop. Break even again. Now it's a little of a mess there. And closes again the basket of trades, only one buy, one sell at break even. So it is around the take profit level, 750. As soon as we reach the minimum profit, 0.01, the expert advisor starts to close the basket of trades. And again, this is what hedging means. Open a sell, price rises, triggers the buy, drops again, rises again probably, and so on, until we don't know. And break even. And that's something I wanted to happen. Sometimes the price will have this open this orders at not exactly, it will move the recovery zone basically. The first recovery zone was, and this shouldn't affect your trading because it will move it only a little. I will explain to you why this happens and why it's good that it happens. The first recovery zone was this one, as you can see, sell here, until this this closed buys here. Why it happens this? It happens because, as you can see here, the price, there was a break even for all these buys that closed here. 1, 2, 3, how many were? 1, 2, I think, only 2. 1, 2, or 3. Anyway, so what happened basically was that the price dropped enough to close the to trigger the stop loss of this this buys. And I remind you that the expert advisor works initially by placing pending orders. Well, since the price was here and didn't drop below the level, the zone recovery buy level up, the higher side, then it couldn't place a pending order. However, and the price rises after that. However, as soon as the price rises enough at a distance higher than the slippage, slippage is in points now on the chart, but in your settings it's in pips. So it's 5 pips, the slippage. If the price continues to rise without the expert advisor being able to place the pending order, then the expert advisor will open this emergency buy, which is the same, calculated by the same idea. So if the price will continue to rise, the profit for this buy will cover the losses from the other sell, 0.19. I think there are two here, 0.10 and 0.19. This is good because otherwise it will close, the price will close this trade, the buy trade, and this will go up and continue to go up. You will be losing everything because you will not be covered by the hedge trade, right? So we leave this buffer zone. We use the slippage also for this as a buffer zone to make sure that from the recovery zone, to make sure that the price moves away from the recovery zone in one or the other direction. And once this happens and the expert advisor opens the buy, well, the emergency hedge trade, then it will place the next pending order, this sell stop 0.5, at the same recovery zone distance from the last open order. So that means that now the sell stop is a little higher than the previous sell, and the recovery zone itself moved from the last hedging trade, the fourth one, to here. Basically, it rises with the slippage distance 5 pips. Now, this shouldn't affect your trading in any way, and it's actually a good thing that it happens, as I explained it. So let's see what else happens. Well, unfortunately, the price continues to drop, triggers some break-evens again. And now it's a mess there. And finally closes the basket. As I said, this shouldn't affect you in any way. The fact that the recovery zone will move with the slippage, this depends on your slippage now. And but 5 pips, it's nothing. It shouldn't affect you. Maybe even more. Another sell, another opposite buy open. We have 3 trades in this basket now, 2 sells and 1 buy. Alright, and this is how the expert advisor works. This is what hedging means. Basket closed again. Um, this is what hedging means. This is how it works. I hope you got the idea. Let's do this one fast to see what's happening. Just by opening random trades, starting from the beginning of this year until somewhere now, just by opening random trades and hedging. No more strategy involved. I remind you, in the strategy tester, the RobotFX Auto Recovery just places random trades based on no strategy. $5,000. $5,000. That's 5 times the initial testing account, $1,000. And I would say that only by hedging, look at this graph, look at this chart. Now imagine what you can do, or imagine how profitable hedging would be if you actually open and calculate your entries, like trade with the trend, or I don't know, trade news, trade consolidation zones. There are so many different methods of successfully trading Forex, except random trades. Imagine the profit for that if you do that. Alright, this is it now. I'm going to end this here. If you have any questions about this expert advisor, visit the RobotFX website, robotfx.ro. Where was it? There it is. Visit the robotfx.ro website. That's the place where you can find the RobotFX Auto Recovery. Also, where you can download the demo that you can use only on demo accounts. And we do appreciate any feedback, any criticism. We'll try to explain or answer your questions. Just use the contact page. You can also write a comment here if you want. Don't expect an answer too soon. We don't really check these social websites, but we will try to. However, as I said, use the contact page and we will answer you as soon as we can, as fast as possible, for any question regarding hedging and how this RobotFX Auto Recovery works. For now, good luck trading and bye-bye. Thanks for watching.